July's inflation print coming in line with expectations. We're taking a deeper dive into three sectors that have been sticky and hit by that stickier inflation: shelter, food, and transportation. We've got team coverage to break it all down with Yahoo Finance's Danny Romero, Brooke DePalma, and Madison Mills standing by. Danny, let's start with you. That all-important shelter inflation's been stubbornly high. What are we seeing?
Brad, shelter is one of those sticky components, but remember, economists tell me that this is also a component that remains noisy month to month. Now, shelter posted a 0.4% monthly gain, and on a yearly basis, shelter came in at 5.1%, and that figure is softening. Remember, the shelter index makes up a third of the overall CPI. And there are two components that economists really pay close attention to and that hold the biggest weight in the shelter component. And that is owner's equivalent rent, OER. That's the hypothetical rent that you would earn if you rented out your property, and rents, which lags real-time data because the government collects rent data every 6 months. So that creates that lagging factor in that index. Now, OER came in at a 0.4% gain last month, while rents came in at a 0.5% gain last month. Now, the reason why renters have been seeing slower rent growth is because there's been so much supply that has been added to the market. But economists, we've heard this story, are still waiting for those numbers to really reflect the CPI. Now, that could still take some time, Brad. Researchers at the Federal Reserve Bank of Minneapolis revealed in a note just last month that they are expecting the shelter inflation to remain elevated this year and even next year. They're expecting that shelter inflation will land at 4.8% on a yearly basis this year, and they're also expecting that it will stay above pre-pandemic levels next year.
Food inflation rising at the same rate as last year on a yearly basis. It's up 2.2% from last July. Now, on a monthly basis, yet again, it ticked higher. It was up 0.2%. Groceries jumped at the same rate as the month prior, up 1.1% and up 0.1% on a monthly basis. So we're still seeing food inflation here. Now, some key items that really got my attention during this report that I saw a closer look into, wanted to dive into, that brought that food at home segment higher. That includes the meat category, primarily driven by the cost of bacon. That really stood out to me. That was up a whopping 8.5% year over year. Now, eggs, something it feels like we've been following for the past year, those were up 19.1%. And another segment that we're watching closely, frozen non-carbonated juices and drinks, that brought overall grocery prices higher yet again. That segment alone, drinks, juices, non-carbonated, up 19.2%. And food away from home, including restaurants and bars and food chains, that jumped 4.1% compared to last year. But we did see inflation uptick 0.2% when it comes to the food away from home category. And that was less than the previous read of 0.4%. And of course, this comes at a time where we've seen food chains, fast food companies, restaurants like McDonald's and Starbucks and KFC and Burger King, among many others, really double down on value and promotions this summer after consumers essentially voted with their feet and they visited less frequently because of this uptick in prices.
And the broader transportation sector, Brooks. I'm going to start with the things that drove inflation up, and then I'll go to some of the better news, at least from a consumer perspective. So transportation year on year, you're seeing increases of 8.8% on an annual basis. And we've been talking about one of the biggest drivers of that being auto insurance. Auto insurance coming in at an increase of 1.2% month over month. And that is an 18% increase year on year. So for those individuals outside of New York City paying for auto insurance, that is a key driver of that consumer sentiment that inflation is getting out of hand. Despite the progress that we are seeing in that headline number, I do want to mention some of the biggest drivers of that 0.2% month over month number included decreased prices in used cars and airline fares, at least cooling inflation for those prices. The index for used cars and trucks fell 2.3% in July. That followed a 1.5% decrease in June. So we are seeing that continuing. Used cars now down over 10% year over year. Also, for the travelers out there, I want to mention airline fares index falling 1.6% as well. All of that leading to a little bit of a broader decline that we saw show up in that headline number. Brad, Shauna, I'm going to toss it back to you.